because right now volatility is utterly fantastic. Hi guys, well today we have a special session for you today in the trading den, but it's just me in the trading den. My entire crew, cameramen, the mixers, the producers, the script writers, not that we really use script writers, but we do have people who kind of collate all the questions and so on that we have on the channel. They're all gone. It's literally just me in the trading den, but therefore today it's just you and I exclusively here, and I'm therefore going to teach you one of my favorite tools of all time. Today I'm going to teach you how to place and trade and profit using power pivots. That is going to be covered right here, right now. Okay guys, so here we are in the trading den. It's very eerily quiet, but that's good because it gives us some lovely concentration time. And today I'm going to show you the tool that kicked it all off for me, and it's all about pivots. In fact, many of you might have Googled me on the internet and seen me make £19,000 in about 4 minutes, trading sterling, I think it was, back in those days. God, it was over literally 15 years ago, that particular trade. I'm going to show you today how I use power pivots. Now, power pivots is a real precision way of making money in the markets. For those of you who are trading throughout this coronavirus time will realize that the markets have literally gone mental. 2008's got nothing on what's going on right now. The market volatility, look, I'm going to say this straight off the bat, market volatility right now will crunch you in half if you don't know what you're doing, because right now volatility is utterly fantastic. However, the swings and the movements, as those of you that are looking at the markets are probably aware, are pretty insane. And for that very reason, we are having a field day, but you've got to know how to handle intraday volatility. If you are unsure, you need to go back and look at my video on the ATR, which is the average true range. That's a cracking video, which is going to show you how to measure, look, where you should be putting that stop loss. If you look at the euro dollar, in fact, let's have a quick look at the euro dollar right now. I'm just going to jump to a regular chart. Let's brick up euro dollar just on the daily. Let's just take a look at the daily chart. I mean, just look at the vast swings that we've got up and down that's happening on euro dollar. Same thing is for sterling. Let's just go British pound against US dollar. And you'll see. Hold on, I haven't got these ones sorted in the list. There we are, there it is. Same kind of picture with sterling. So big swings up and down. You know what's happening right now. We're getting deaths every 5 minutes from different countries around the world. You've got Donald Trump saying all sorts of crazy things. You've got Boris Johnson, who's the Prime Minister of the United Kingdom, has just come down with coronavirus, as has the Health Secretary. So it's all a bit mental. We're thinking the UK may be in lockdown till June, and the Deputy Health Minister has now just said that could even be extended to December. So who knows what the hell is going on? I can tell you one thing, for currency traders, whilst from a humanitarian perspective, this is a disastrous time. And of course, many people are losing their incomes. Many people are having to really reevaluate how they're going to live their lives this year. Currency traders are having a field day. I mean, let's be really clear about that. There is volatility out there. And what we don't want is flat snake-like markets. We want markets which are raging up and down. You only need to look at this chart to see that markets are raging up and down. So there is opportunity out there. The question then becomes, responsible trader, how do I harness, how do I tether that bull, and how do I make sure I can use it in a productive way to make money rather than just get slopped around, because there is a lot of slopping around going on out there. I'm going to introduce you now to a trading tool I've been using for literally the last 25 years. It's the concept of trading pivots or using pivot points. So this is power pivot points. We're going to get into that right now. So let me just jump to, if you look at my screen, you'll notice that I've got a little button here called Morning Pivots. And really what I'm doing here is I've set my screen layout in SmartCharts so I get a good view on what the markets are doing. Now, if you look how I've organized this, and if I put my mouse here, you can see I've got my four screen layout is detailed as the following. I'm going to tell you how I do this so you can set your SmartCharts up to be exactly the same as mine. So you'll notice that if I click here, I can grid my charts for 4 charts. You want to make sure that's selected. Top left-hand corner, we're going to have the daily chart. That's D1 daily chart. So you select daily here, and you just literally pick daily. No strategy here at all, not useful. because we're literally going to do this as a manual setup. You'll see how the whole thing comes together in a second. Now you'll notice the green dotted line here is the 200 period moving average. Now that is the guideline for is the market in an uptrend or a downtrend. It's a very broad kind of indicator which says, look, if the markets are trading underneath that 200 period moving average on the daily, we're looking at short positions. Now, we then move over to the next screen on the right-hand side, and you'll notice there's a green spot. Now, let me just click on that green spot. And what I've done is I've series linked these charts together, which basically means that whatever currency I select on any of the charts on this screen, it will update all the other charts. And the reason I'm doing that is I'm just using these 4 separate windows to have just a different view on the same world. Of course, right now I'm looking at dollar Swiss. That's USD/CHF. And you'll notice I've picked the same color. So they're all the same color links. If I confirm that, it just means if I change anything here, it will update all the screens. See, look, I've just clicked on Sterling Kiwi and it's updated all those screens. Let me go back to the dollar Swiss though, because I want to focus predominantly on that. There it is. Right, now, you'll notice I've created a green dotted line, which is going to be the 200 period moving average. If you don't know how to put that on your chart, let me just quickly show you how to do that. You come across and you hit here indicator, and I've got in here EMA, so you just type in here EMA and it brings up the exponential moving average, and then on it goes. Now let me show you how you edit the exponential moving average. Let me just remove one because you don't need 2 moving averages of the same number. I just then hit this cog, this settings button here. And all I've done is I've said source is closed, it's exponentialized, which means it gives more pricing relevance to more recent pricing data. So that's exponential. The style I've picked is dotted, nice fat line 4, so it's obvious, and I've made it green. I update that. And that gives me that dotted red, that dotted green line, which is the 200 period moving average. On dollar Swiss, you can see that price is underneath the 200. So that tells us that's a tick for a short. Then we move across to the 4-hour chart. Price is underneath that. That's a tick for a short. Then the bottom left screen, now notice I've just added the same indicator to all of those screens. I can even save that profile of indicator if I want. All I just would do is I hit the save button here, and I can call this, I don't know, call it Greg Pivot, if we like. And I can say save that, and that's now Greg Pivot. Then if I then open it, if I then want to add it onto here, I'll just hit Greg Pivot, hit the plus, and it adds it to there, you see? So boom, done. But obviously I want to keep it nice and simple like that. So I can add, let me just close that. I can add any of those profiles or templates I want to any of my screens. That's completely acceptable. Now, bottom left-hand corner, I've got the hourly chart, so I can see price is again underneath that 200 period moving average. And then here, and this is the interesting one, is my 5-minute chart, okay? And that is the one that I'm going to have my pivot lines on. So what am I looking to do? Well, let's open up the action window. Is the window which is bottom right. That's the one where all the trading activity is going to take place. So I'm going to open that window right now, and you'll see if we can just drag this down. Now you can see this main pivot point line. Let me just change my my cursor to a grab tool. Let me just see if I can bring this now. Okay, great. So you can now you're getting an understanding. Now, you can see price is sitting right in the middle of that main pivot point line. So what is a pivot point line? How are these pivot point lines calculated? What is the game all about? Pivot point lines are calculated from the previous trading session's activity. So you'll notice the main blue line is an important, that's called the main pivot point line. If the price is below that line, we look to take short positions. If the price is above the blue line, we'd look to take long positions. However, we would not be taking a long position here because we're actively seeking short positions here. So if you look here on here, we would wait for this price to break below the blue line, and then we would run it just north of the first red S1 line. So this is the support first S1 line. This is S2, and lower down here will be S3. Above is R1, which stands for resistance line 1. This is resistance line 2. And of course, this is resistance line 3. So on the dollar Swiss, I can take this trade on. Now, let me show you how you can kind of make this a little bit better. So I would take this trade on if I get a confirmed break below that pivot point line. Now you can see markets in the dollar Swiss market are sitting right on the pivot point line. There's really no major direction moving here. That's okay, because that means it's potentially going to break down or break up. If it breaks up, I'm not interested in placing the trade whatsoever. I'm only interested in placing a trade which would go short. Because why? Because I've got all the major market direction in my favor. Look to the left. Is the price below the 200 on the daily? Yes, it is. Is the price below the 200 on the 4 hour? That's this top right hand chart. Yes, it is. Is the price below the 1 hour on the 200? That's the bottom left chart. Yes, it is. And then finally, where I do my work, my action is here on that bottom right chart. Now hit the middle button there on SmartCharts, which will expand that screen so I can really see what I'm doing. You'll see price is now stuck onto that pivot point line. That is an uncertain market, but that's okay. When market gets some direction, if it continues in the same direction, physiology of the other major time frames, when we're looking up to get our major time frame direction, that daily, that 4 hour, that 1 hour, which is pushing down, we want to set ourselves up to catch this little fish if it's going to move in our direction. Let me show you how you do that. So all I'm going to do here is I'm going to hit the short button. Now I'm going to move my lines around. So I hit the short button and I say, look, I'm going to take profit north of the red line. I'm going to have my sell entry. And if I'm smart about this, I move my short line just south of where we've had this. So I'm going to let it clearly break through that major pivot point line. And I want my stop loss to be up here. So I've got some nice protection. So you can certainly see, look, I'm risking £2,000 to make 2,600. And why have I put it just north, let's say, of this R1 line? Because you're going to find that price is going to bounce off there. If it drops through here and enters me short, for it to come all the way back and break through the main pivot point line and break through the R1 line, it's a dumb trade. It's a duff trade. It hasn't worked out. But I'm giving myself plenty of protection. I'm putting my stop loss behind the main pivot point line, which is now has got to break through to go short. And I'm putting my stop loss above that R1 line. That's really going to be important. That's going to give me lots and lots of protection. Plus, I've got more profit to make than I'm risking, but it nearly is a one-to-one. Profit is a little bit more in my favor. So I like the look of that trade. I've got all the major market direction in my favor. The price would have to break down through the pivot, and I'm making sure that it's breaking through enough of this support, which is formed just underneath the pivot point line. So I want to make sure that I get through the pivot point line. I want to make sure I break through the price support that's there, and then it's on its way. To victory. My take profit should be north. Should I say should be north of that major support line? So it's basically a one-to-one nearly kind of trade. But it's just me in the trading den. My entire crew, cameramen, the mixers, the producers, the script writers, not that we really use script writers, but we do have people who kind of collate all the questions and so on that we have on the channel. They're all gone. It's literally just me in the trading den. But therefore, today it's just you and I exclusively here, and I'm therefore going to teach you one of my favorite tools of all time. Today, I'm going to teach you how to place and trade and profit using power pivots. That is going to be covered right here, right now. Okay guys, so here we are in the trading den. It's very eerily quiet. But that's good because it gives us some lovely concentration time. And today I'm going to show you the tool that kicked it all off for me. And it's all about pivots. In fact, many of you might have Googled me on the internet and seen me make £19,000 in about 4 minutes. Trading sterling, I think it was, back in those days. God, it was over literally 15 years ago, that particular trade. I'm going to show you today how I use power pivots. Now, power pivots is a real precision way of making money in the markets. For those of you who are trading throughout this coronavirus time will realize that the markets have literally gone mental. 2008's got nothing on what's going on right now. The market volatility, look, I'm going to say this straight off the bat. Market volatility right now will crunch you in half if you don't know what you're doing. Because right now, volatility is utterly fantastic. However, the swings and the movements, as those of you that are looking at the markets are probably aware, are pretty insane. And for that very reason, we are having a field day, but you've got to know how to handle intraday volatility. If you are unsure, you need to go back and look at my video on the ATR, which is the average true range. That's a cracking video, which is going to show you how to measure, look, where you should be putting that stop loss. If you look at the euro dollar, in fact, let's have a quick look at the euro dollar right now. I'm just going to jump to a regular chart. Let's brick up euro dollar just on the daily. Let's just take a look at the daily chart. I mean, just look at the vast swings that we've got up and down that's happening on euro dollar. Same thing is for sterling. Let's just go British pound against US dollar. And you'll see. Hold on, I haven't got these ones sorted in the list. There we are, there it is. Same kind of picture with sterling. So big swings up and down. You know what's happening right now. We're getting deaths every 5 minutes from different countries around the world. You've got Donald Trump saying all sorts of crazy things. You've got Boris Johnson, who's the Prime Minister of the United Kingdom, has just come down with coronavirus, as has the Health Secretary. So it's all a bit mental. We're thinking the UK may be in lockdown until June, and the Deputy Health Minister has now just said that could even be extended to December. So who knows what the hell is going on? I can tell you one thing, for currency traders, whilst from a humanitarian perspective, this is a disastrous time. And of course, many people are losing their incomes. Many people are having to really reevaluate how they're going to live their lives this year. Currency traders are having a field day. I mean, let's be really clear about that. There is volatility out there. And what we don't want is flat, snake-like markets. We want markets which are raging up and down. You only need to look at this chart to see that markets are raging up and down. So there is opportunity out there. The question then becomes, responsible trader, how do I harness, how do I tether that bull, and how do I make sure I can use it in a productive way to make money rather than just get slopped around, because there is a lot of slopping around going on out there. I'm going to introduce you now to a trading tool I've been using for literally the last 25 years. It's the concept of trading pivots or using pivot points. So this is power pivot points. We're going to get into that right now. So let me just jump to, if you look at my screen, you'll notice that I've got a little button here called Morning Pivots. And really what I'm doing here is I've set my screen layout in SmartCharts so I get a good view on what the markets are doing. Now, if you look how I've organized this, if I put my mouse here, you can see I've got my four screen layout is detailed as the following. I'm going to tell you how I do this so you can set your SmartCharts up to be exactly the same as mine. So you'll notice that if I click here, I can grid my charts for 4 charts. You want to make sure that's selected. Top left-hand corner, we're going to have the daily chart. That's D1 daily chart. So you select daily here, and you just literally pick daily. No strategy here at all, not useful, because we're literally going to do this as a manual setup. You'll see how the whole thing comes together in a second. Now you'll notice the green dotted line here is the 200 period moving average. Now that is the guideline for, is the market in an uptrend or a downtrend? It's a very broad kind of indicator which says, look, if the markets are trading underneath that 200 period moving average on the daily, we're looking at short positions. Now, we then move over to the next screen on the right-hand side, and you'll notice there's a green spot. Now, let me just click on that green spot. And what I've done is I've series linked these charts together, which basically means that whatever currency I select on any of the charts on this screen, it will update all the other charts. And the reason I'm doing that is I'm just using these 4 separate windows to have just a different view on the same world. Of course, right now I'm looking at dollar Swiss. That's USD/CHF. And you'll notice I've picked the same color. So they're all the same color links. If I confirm that, it just means if I change anything here, it will update all the screens. See, look, I've just clicked on Sterling Kiwi and it's updated all those screens. Let me go back to the dollar Swiss though, because I want to focus predominantly on that. There it is. Right, now, you'll notice I've created a green dotted line, which is going to be the 200 period moving average. If you don't know how to put that on your chart, let me just quickly show you how to do that. You come across and you hit here indicator, and I've got in here EMA. So you just type in here EMA and it brings up the exponential moving average, and then on it goes. Now let me show you how you edit the exponential moving average. Let me just remove one because you don't need 2 moving averages of the same number. I just then hit this cog, this settings button here. And all I've done is I've said source is closed, it's exponentialized, which means it gives more pricing relevance to more recent pricing data. So that's exponential. The style I've picked is dotted, nice fat line 4, so it's obvious, and I've made it green. I update that. and that gives me that dotted red, that dotted green line, which is the 200 period moving average. On dollar Swiss, you can see that price is underneath the 200. So that tells us that's a tick for a short. Then we move across to the 4-hour chart. Price is underneath that. That's a tick for a short. Then the bottom left screen, now notice I've just added the same indicator to all of those screens. I can even save that profile of indicator if I want. All I just would do is I hit the save button here, and I can call this, I don't know, call it Greg Pivot, if we like. And I can say save that, and that's now Greg Pivot. Then if I then open it, if I then want to add it onto here, I'll just hit Greg Pivot, hit the plus, and it adds it to there, you see? So boom, done. But obviously I want to keep it nice and simple like that. So I can add, let me just close that. I can add any of those profiles or templates I want to any of my screens. That's completely acceptable. Now, bottom left-hand corner, I've got the hourly chart. So I can see price is again underneath that 200 period moving average. And then here, and this is the interesting one, is my 5-minute chart, okay? And that is the one that I'm going to have my pivot lines on. So what am I looking to do? Well, let's open up the action window, is the window which is bottom right. That's the one where all the trading activity is going to take place. So I'm going to open that window right now, and you'll see, if we can just drag this down. Now you can see this main pivot point line. Let me just change my my cursor to a grab tool. Let me just see if I can bring this now. Okay, great. So you can now you're getting an understanding. Now you can see price is sitting right in the middle of that main pivot point line. So what is a pivot point line? How are these pivot point lines calculated? What is the game all about? Pivot point lines are calculated from the previous trading session's activity. So you'll notice the main blue line is an important, that's called the main pivot point line. If the price is below that line, we look to take short positions. If the price is above the blue line, we'd look to take long positions. However, we would not be taking a long position here because we're actively seeking short positions here. So if you look here on here, we would wait for this price to break below the blue line, and then we would run it just north of the first red S1 line. So this is the support first S1 line, this is S2, and lower down here will be S3. Above is R1, which stands for resistance line 1. This is resistance line 2, and of course this is resistance line 3. So on the dollar Swiss, I can take this trade on. Now let me show you how you can kind of make this a little bit better. So I would take this trade on if I get a confirmed break below that pivot point line. Now you can see markets in the dollar Swiss market are sitting right on the pivot point line. There's really no major direction moving here. That's okay, because that means it's potentially going to break down or break up. If it breaks up, I'm not interested in placing the trade whatsoever. I'm only interested in placing a trade which would go short. Because why? Because I've got all the major market direction in my favor. Look to the left. Is the price below the 200 on the daily? Yes, it is. Is the price below the 200 on the 4-hour? That's this top right-hand chart. Yes, it is. Is the price below the 1 hour on the 200? That's the bottom left chart. Yes, it is. And then finally, where I do my work, my action, is here on that bottom right chart. Now hit the middle button there on SmartCharts, which will expand that screen so I can really see what I'm doing. You'll see price is now stuck onto that pivot point line. That is an uncertain market. That's okay. When market gets some direction, if it continues in the same direction, physiology of the other major time frames, when we're looking up to get our major time frame direction, that daily, that 4-hour, that 1 hour, which is pushing down, we want to set ourselves up to catch this little fish if it's going to move in our direction. Let me show you how you do that. So all I'm going to do here is I'm going to hit the short button. Now I'm going to move my lines around. So I hit the short button and I say, look, I'm going to take profit north of the red line. I'm going to have my sell entry. And if I'm smart about this, I move my short line just south of where we've had this. So I'm going to let it clearly break through that major pivot point line. And I want my stop loss to be up here. So I've got some nice protection. So you can certainly see, look, I'm risking £2,000 to make 2,600. And why have I put it just north, let's say, of this R1 line? Because you're going to find that price is going to bounce off there. If it drops through here and enters me short, for it to come all the way back and break through the main pivot point line, and break through the R1 line, it's a dumb trade. It's a duff trade. It hasn't worked out. But I'm giving myself plenty of protection. I'm putting my stop loss behind the main pivot point line, which is now has got a breakthrough to go short. And I'm putting my stop loss above that R1 line. That's really going to be important. That's going to give me lots and lots of protection. Plus, I've got more profit to make than I'm risking, but it nearly is a one-to-one. Profit is a little bit more in my favor. So I like the look of that trade. I've got all the major market direction in my favor. The price would have to break down through the pivot, and I'm making sure that it's breaking through enough of this support, which is formed just underneath the pivot point line. So I want to make sure that I get through the pivot point line. I want to make sure I break through the price support that's there. And then it's on its way. To victory. My take profit should be north. Should be north of that major support line. So it's basically a one-to-one nearly kind of trade. I like the look of it. I then just hit go, and then that is all set up and it's ready to trade. Let's have a look at a couple more just to give you an understanding of how that works. But hopefully you can see there's a structure to this. There's the daily, there's the 4 hour, there's the 1 hour, and then the action happens on that 5-minute chart. Let's look at a couple more. I did spot euro yen this morning, so I can literally, these are all series linked, so I just click on one and it should update all of my charts. There we go. So again, I've got price on the daily, which is below the 200, as you can see. I've got price just below, around the 200 on the 4 hour, price just below the 1 hour. Like this look. We like the look of this because we're just breaking through those 200 on the daily, on the hourly or on the 4 hour, which means we could have a good push from here. Let's open up the 5-minute chart. Now we can see what's happened here. Well, on the 5-minute chart, we're already through the main pivot point line. That happened this morning. Look at that. High test off this morning. Lovely run down. The move's already happened on that. Okay, fair enough. So what happens? How else can we play this? Well, we can look, if the market comes back and touches again towards the 200, that can give us an opportunity to go short. We can put a short position on that, no problem whatsoever. And that means that then if it does, we can put a sell stop here with a stop loss. Let's put that in. So I can put my stop loss above. I can put my sell entry if we hit around this level here, and I can put my take profit right back down to where it was before. That should then give me, let's have a little look. Yeah, I'm gonna put my stop loss just north of the pivot point line because that is going to give me enough resistance protection. Quite happy with that. There's no point in putting it all the way at R1 because we can see the range where the euro yen is. You can see what happened early this morning, touched up through the pivot point line, fell, hit a lovely good old 70 pip run this morning. Could go ahead and do that this morning. So I can just leave this bait in the water. If the market comes back and touches that, I'm going to be short at this level here, which is short of 119.85, stop loss at 120.31. And my take profit, if I can use my eyeballs, 119 spot sort of 20 or somewhere around there. 20, no, actually 15, I think. Yeah, 13. Okay, 119, 13 or 11. Doesn't matter. It's there or thereabouts. In fact, actually I want it. Yeah, let's go 11, 119.12. That would be the preferred number. So yeah, my profit target is 3,300. I'm going to take, my trade size is 6 lots. By the way, if you're concerned or you're worried or you don't understand how to trade size properly, SmartCharts does this so beautifully and so elegantly. On the right-hand side here, look, I just put in the risk on my ultimate account. There's 104 grand in this account. So I'm only going to risk 2% of my account. Then SmartCharts cleverly figures out how many lots I should use, or if we want to do spread bets or pounds per points or contracts for difference. It really doesn't matter. You can actually trade size in a variety of different ways. Pounds per point, lot size, cash amount, whatever you like. Anyway, so on the euro yen, you can see again, I've got all that trade confluence is what we call it in the mix. So I now can hit, I can put my expiry because it's a pivot is end of day. So I'm going to stick that on end of day. In other words, if it doesn't happen by the end of today, those pivot point lines are irrelevant. So I want this trade taken off the table. I didn't do that with my last trade. Let me show you how you go back and do that. I literally can shrink the screen right down. Then I go back to trade. You'll see the 2 trades I just put on. Let's put pending here. And the first one I did was that dollar Swiss. And you can see that trade is in. And there's my expiry. I put no expiry on that one. So I want to go in and change that trade. So let me pick this one back up. There we go. So I've clicked on it. Now watch. if I bring the trade ticket, change my expiry here, and I put end of day, and then I hit OK, it'll then put the end of day, which means that it's going to be in 9 hours and 23 minutes. And there you go. You can see the countdown clock is ticking. So if I go back to my charts, let's just have a quick look at sterling. Last one I want to have a look at, and then you'll get a good understanding. You can see now it's put a dotted line. Do you see the dotted line on the top? That is when the trade expiry is going to happen. If I open up this screen here and I scroll along, hold on, you'll see this dotted line. That dotted line says this trade will be taken off the table if it hasn't triggered at this point. So that gives you an understanding of how the trade management system works, okay? And let's just do one more. A little sterling trade again. So we've got price. We haven't got confluence here. Price is above the 200 on the hourly. Was it sterling Aussie? Perhaps I was looking at this morning. Yeah, you've got a lack of confluence here again. So you've got price above. Here we go. This is a bit better. And you've already had the reaction. So sterling Aussie price above the 200 on the daily, as it is on the 4 hour, as it is on the 1 hour. Bringing up then the action charts for these pivots. Look at this. I mean, this is a volatile market, no less, right? But let's just bring that across. So this is your 5-minute chart. Now you can see price has broken up through the 200, through the main pivot point line here. Your profit target would be the R1. We're not in an ideal situation to enter this trade for obvious reasons, because it's either in play. I don't like the look of trading this above that, so that's not something I want to do. But you've got the 2 ones on there, the euro yen. The reason I wouldn't enter this one is because either we would want to make sure we've cleared this, these would be intra pivot point resistance areas, and we want to get it on a break through the main pivot point line here. That's already happened, so that's not to be traded right now. But the euro yen one we can keep watching, and the dollar Swiss one, have a look yourself on your copy of SmartCharts. If you haven't got yourself a copy of SmartCharts, look in the description of the video here, and there's a 7-day free trial of SmartCharts for anybody who's a subscriber to my YouTube channel. Just take advantage of that. You'll find there's lots of training. If you're not, one of the things I want you guys to be really aware of is I try and put lots of great content on the YouTube channel. I know lots of other people who run their YouTube channels run it as advertising campaigns. Look, I believe in just giving you the content and the training on there, and then, you know, and I think if you just serve people and give them as much great content as possible and help them, they'll make a decision whether they want to go ahead and do the full training. But I will say this, and please don't think this is a big pitch or anything, but the training in SmartCharts is incredible because it's been chapterized, which means we build you up. There's a whole trader cycle which has been built up so that each layer sits on top of itself. So then when you get to the kind of training I'm doing on YouTube, you're going to go, oh my God, yeah, I see exactly where that slots into the grand scheme of things. So we've put probably about 2.5 years of thinking into how to structure this in such a way that it's modularized, but you can then follow it, and you can and you can really build yourself from the ground up. So if you haven't got a free copy of SmartCharts yet, it runs for 7 days. Grab it and then go through all the training, because I think you're going to find that to be incredibly powerful and helpful. So that is my power pivot strategy. Let's watch those over the next couple of days. That euro yen, that dollar Swiss trade. Remember, it's confluence of all of the time frames. We want to make sure we got that done. And if you enjoyed this video, please hit like. If you haven't subscribed to the channel already, make sure you get yourself on there and do that. And don't forget to look in the description if you'd like to get yourself access to SmartCharts. There is a hell of a lot of tools. I've only shown you a little bit so far. Grab that. And if you're at home in isolation, which seems to be the case for most of the world, please take care of yourselves and your family, and I look forward to seeing you at a future training video from here in the Trading Den. Today, we're talking about how not to trade Forex. 7 rules to guarantee your success. Let's start with number 1. And as you can see with the screen behind me, created just for your benefit, is a screen with multiple indicators. Now, this is the biggest mistake that people make and I can tell you now, I've been trading now for 24 years. I've been coaching and training people for over 17 years. I've had over 300,000 people across all my trading floors and trading centers around the world, which continually keep expanding, with individuals who come along with their trading screens rattled up with a number of different indicators, whether they be trending indicators, oscillating indicators, range-based indicators, indicators that show changes in speed, show changes in volatility, show changes in volume. Stop. The rule of thumb is 2 is a company, 3 is a crowd, 4 you can get the door. And the point of that is that the more indicators that you put on your screen, and the reason people put more indicators on their screen is effectively what they're doing. A, is they're gambling because they're not trading with a plan. And B, what they're trying to do is to justify the fact that they're not really gambling, is they feel if they add more technical indicators to the picture, of course, they're looking more professional, and of course, they're giving themselves a greater probability or prospect of success. Look, the reality is this. If you are putting 4, 5, 6, 7 different indicators, the probability of those indicators correlating or cross-correlating suddenly becomes lower than a snake's belly. The reality is that if you have too many indicators in your time frame reference of window, you're going to have mixed signals, and we all know the confused mind does not trade successfully. So the real rule of thumb here is 2 is preferable, 3 is really max. So as you can see on this euro sterling, we've got some pivot lines here. Now pivot lines are really great for showing you where the top of the market is, where the bottom of the market is, where the floor and where the ceiling of the market is. When you're using an indicator like pivots, you really need no other indicator, maybe a MACD indicator to show you some overbought or oversold zones, or whether there's buying or selling in control at this time. So a nice conformational indicator for pivots would be a MACD, but what I've done here is I've put a number of indicators. I've got volatility indicators, RSI, I've got Williams accumulation distribution indicator, I've got average true range, and I've even managed to put on here an equivalent of a Bollinger Band. So the reality is too much of a good thing is not a good thing. We want to restrict ourselves to 3 indicators max. If you're wondering which indicators should be placed on which trades at which time, your first rule of thumb there is to recognize, am I in a trending market? And therefore I should only be using trending indicators. Am I in a range-bound market where I should then be using range-bound indicators? Range-bound indicators are those which test the higher and lower variables, such as pivot points, such as Donchian channels, such as Bollinger Bands. Trend-based indicators are, of course, your classic moving averages, your MACDs, your MACDs, which is moving average, convergence, divergence indicators, and a whole variety that are all available for training in SmartCharts, of course. So let's keep them non-mixed. This is a big mixed bag here to show you what a mixed bag looks like. We don't want to do that. Make sure you know, first of all, up front, whether the market's trending or whether the market is ranging, and then apply the correct indicators. Now, the best thing you can do if you want to cross-correlate is to look at higher time frames. So if you're trading the 1 hour chart, a really good idea is to look at the 4 hour chart or even the daily chart. If you're trading the daily chart, looking higher than the daily chart to the weekly chart can be a mistake. And the reason for that is a trade that, when you're looking at a cross correlation to weekly chart, is really a trade that's going to run many weeks. Many of you are not going to want to be in trades that run for many weeks, of course, because the longer you are in these positions, when you're using leveraged instruments, are going to be paying more for the trade the longer it's in. Remember, if you're in the UK citizen right now, you're going to be paying a spread betting charge to be in your positions overnight. It's called an overnight financing rate. You want to keep that to a minimum so you can be in a position, get the trade right, and then exit the position. So for those of you that are trading 1 hour charts or trading half hour charts or 15-minute charts, we just click up to the higher time frame. If it's a trending condition, we look at trending indicators. If it's not, if it's a range bound, we use range bound indicators. Look at the higher time frame or even a lower time frame to get some entry correlation. Higher time frame normally for the direction, lower time frame for more of an elegant entry. If you want to time your entry even better than your current time frame, look at the lower time frame to give you a better entry. Look at the higher time frame for the bigger picture. What looks short on a very short time frame can actually be part of a much larger, longer cycle. And therefore, if we look at the physiology from phase 1 to phase 2 in that higher time frame, we've got a much better picture than just throwing hundreds of indicators on a chart. So that's your first step. Number 2, what not to do in the currency markets is trading off emotions. Now, you know if you're trading off emotion because you've got no real rationale to be in the trade, number 1. You're not trading consistent with a trading plan, number 2. And 3 is you can't wait to get in the trade. Now, if you can't wait to get in the trade, the reality will probably unravel that you can't wait to get out of that trade, because a trade rushed in is often a trade you can't wait to get out of. So trading off emotions is really critically important. A good way to understand if you are trading off emotions is to start by planning a trading plan, which defines what trades you're trading, when you're trading those trades, what positions you're in. A really good rule of thumb is the 5-3-1 rule. We trade mostly 5 currency pairs. Now, that's not to say we won't trade outside of those 5 currency pairs, but we trade 5 currency pairs because we want an intimate understanding of how those currency pairs move. We use 3 different trading strategies that we become intimately involved with, and we trade at the same time of day. So we know what markets are doing at those same, you've got the same participants trading the market at the same time of day. By adhering to the 5-3-1, we're not trading from emotions, we're not rushing in. You should take, as a beginner, you should take at least 5 minutes per trade to plan your trade, to make sure that that you're asking the power of negative questions. So you're asking yourself, not what should I spend my money on when this trade goes well, but you should be asking yourself the question, why will this trade not work out? Why am I completely out of my mind placing this trade? What is the stupid idea I've got? And why the hell do I think I'm going to make money on this? You've got to be the person that asks yourself the tough questions, because nobody else will be sat there asking those questions to you when you're placing the trade. You'll be gung-ho, you'll be placing the trade quickly outside of trading a plan. That tells you emotions are involved. And then, of course, the person that will be sat with you when the trade goes wrong, it's probably your spouse telling you what an idiot you are for placing a trade too quickly without due consideration and without planning it properly. So number 2, don't trade off emotions. Trade from your plan so you know what you're doing and when you're doing it. Okay, so step 3, how not to trade. Look, you've got to stick yourself to a trading plan. That's critically important. But most importantly is to not then switch away from that plan when things go wrong. You've got to give yourself some bedding in time. What do I mean by bedding in time? Any plan that you try and run the first few weeks through will be brand new to you, and there's an adjustment period of time. You know, it takes the brain a little while to just embed some principles, some tools. They say it takes up to 21 days to embed a new set of principles, a new set of rules. You know, our brains are configured to follow a set of rules when they fit inside our central nervous system, when they're controlled by our unconscious part of our brain, when we aren't have to think too much about it. When we haven't to think too much about it, we're conscious. And when we're conscious, we have to work hard. And when we have to work hard, we're under stress. And we're under stress and the markets are moving against you, you're going to pop. So the reality is you've got to give yourself a bedding in time, and that should be part of the trading plan itself. So what people tend to do is they'll take on a trading strategy that is unknown to them. They'll start trading the position. It'll go well for a few days. Then they'll find that they'll lose on a few positions. Then there'll be 2 or 3 days out of bed and they'll think, oh my God, the plan's wrong, the strategy's wrong. And then they'll change it. And what they do is they spend their time hopping from horse to horse to horse. There's an old trading strategist called Bob Schmeichel. And Bob Schmeichel's rule of thumb was get in line and stay in line. Now, get in line and stay in line means, you know, imagine you're at the airport and you're queuing up with your luggage to get to your destination. Your plane's taking off pretty soon and you're watching all the lines. You stand in one line, then you think, well, hold on a sec. My line's not moving quickly enough. So you hop from one line and you get to another line. And then you look back at the line you're in, you realize that's now got through, they've checked in, and now I move lines again. So what I'm ending up doing is I'm switching my position from line to line. I'm jumping horses from time to time, and I'm not giving one line long enough to bed in and yield me results. So this is a really important principle. Step number 3 is give yourself a minimum, and the rule of thumb here is 21 days. And that means consistent. These are not including weekends, these are trading days. So we're really looking at over a month in time. So at least, you know, 5 weeks in total, right? So you've got a 5-day trading week. Many of us traders trade Monday to Thursday. We don't normally place positions on a Friday because we don't want to run into the weekend rumble. So we let it go from months of 16 days as a month, another 4 days into your next month. It gets you close to 20, 21 days. Then you can say that your trading plan has been bedded in. If we hop from horse to horse too quickly, we're going to run ourselves into problem. That's something you really don't want to do. Also make sure that part of your trading plan includes positions you understand. So the principle here is trade what you know. Don't trade things you don't know. Now, obviously that means, back to my 5-3-1 analogy, we trade 5 positions, we trade 3 strategies, and we trade pretty much the same time of day. And the reason we do that is because we want to achieve a level of mastery. Mastery is when our unconscious brain can place the positions without our conscious brain having to think about it. Consider when you drive to work every day. You probably drive the same day. You probably do the same thing every day. We are creatures of habit. And you've probably maybe had this happen to you whereby on a Friday you drove to work. And let's say by chance you need to use your car on Saturday and you're going down the same road that leads to where you work. You'll probably find yourself driving to work unconsciously and then realizing, oh my God, I've got myself off path here and I now need to engage my conscious brain, because we are creatures of habit. So harness that, because what that means is that if you use the same strategies on the same currencies at the same time of day, and you're going to load that into your unconscious brain. And there's a reason for having an unconscious brain. It means that we can perform multiple calculations, multiple routines and systems and strategies without having to engage our conscious brain. That frees our conscious brain up to notice if things are going wrong. So bedding strategies in, giving it 21 days to really sit with us so it loads into the unconscious part of our brain, frees up the conscious part of our brain to spot if there are any uncharacteristic, anything's problematic with the trading activity that we're doing, and allows us to get better, sharper, more profitable, and ultimately more successful. I hope you've enjoyed this video. If you liked it, hit like. If you haven't subscribed already, get yourself on that subscribe list. And we look forward to speaking to you, talking to you, and training you from my trading den here in the UK in future sessions. Okay guys, step 4 on how not to trade Forex. Look, this is a biggie, so real listen up on this one. Do not trade around news events. Now this is a really, really important one, particularly for you beginners out there, because you probably aren't aware of the impact that economic news and calendared economic news has on the currency markets. When big news announcements comes out, volatility moves crazy. Now if you don't know what volatility is, it's price range movement over a set given period of time. The problem with that is, of course, if you've got a stop loss in and you've entered a position, you can get stopped out of your trade very easily and take a very quick loss where you needn't had to at all. So it's really important that you understand when news is coming, when it's predicted. Now, if you're somebody out there who doesn't use SmartCharts and you're somebody just starting out and you want access to free news, there are lots of fantastic economic calendars out there where you can access your news. I'm just going to pull up one right now. This is one of my favorites that I used for many, many years before I built my own trading platform. This is FX Dailies. You just click on the economic calendar. I'm going to kind of just show you how you get to that. This is Daily FX. So for those of you that are watching, dailyfx.com is a great news site you can go to. Click on calendars over here and then economic calendar. And then what it will do is it will jump to the day. And it'll show you the currency, and then it'll show you what news is coming out, if it's high, medium, or low based news. It'll show you what the actual is, what the forecast, and what the previous is. It's really important to be aware when there's an important news announcement coming out, because it will disrupt your trade. So look, you need to think of trading like sailing. If you're somebody out there who's ever sailed a small boat before, you'll know there are certain days you can go, you've got great wind, you can go out, you can have a great tour around a lake, come back in, stick your boat in the boat shed, you've had a great day. Other days you've got a forced 10 gale wind out there. You certainly don't want to be taking a small laser boat out there, because you will capsize it. There are days to sail where the weather's perfect, and there are other days where it's not. How that correlates to the currency trading world is there are days when there are certain big news announcements. Like for example, you've got FOMC meetings, you've got non-farm payroll numbers. There are certain days in the month where we know those big news announcements are coming, and we don't trade those currencies at those times. So you can get yourself a news or an economic calendar you can download or you can access online. Better yet though, if you're a SmartCharts user, we kind of did the thinking for you there already. So I'm going to show you how we show you where the news is and what the impact of that news is directly in SmartCharts. So let me just jump over to SmartCharts right now, and I'll show you. I've got a chart here of the British pound against the US dollar. This is cable. I've got nothing on this chart. I kept it really vanilla, nice and clean. How do I know if there's a news announcement coming? Well, of course, I could do what I've just told you to do. I could go and look at economic calendar. I can go and see what news announcements are coming. I could try and figure out what the impact is. But better yet, in SmartCharts, if I click on the eye icon on the far right, it will tell me, first of all, what trading time zone I'm currently in. So you can see I'm in nylon right now, which is between New York and London. That means that New York is currently trading and London is trading. Now, you may wonder why that's important. Well, first of all, if you consider there are three major time zones. There's the Asian time zone, which encompasses Australasia and Asia. There's EMEA, which is Europe, Middle East and Africa. And then you've got North America. If you consider, and this is not true, but if you consider 33% is in Asia, 33% is in Europe, Middle East and Africa, and 33% is in North America. It's not evenly divided like that. But when you've got two trading sessions, trading at the same time. Remember, the currency markets trades 24 hours a day, 5 days a week. When you've got two trading sessions, like all of North America and all of Europe, Middle East and Africa trading at the same time, which is right now, if you look at that picture, that line says New York is trading, London is trading, Tokyo, Sydney. Okay, so the Asian markets are fast asleep. But right now you've got two time zones. That means you've got a good 60% of the currency market accessing and actively participating in the market. Volumes will be higher. There'll be a lot more activity. Volatility is likely to increase during this period of time. And certainly if positions come on with big news announcements on the British pound against the US dollar, now you've got two constituent currencies from both regions which are active in the market. There's likely to be an impact if there's a news release coming. So SmartCharts tells you which news announcements are coming at what time. So it tells you what's lined up. You can certainly access that here. But better than that, if I close down that window, so I now know I'm in nylon, I'm here between these two time zones. So I know I've got 60% of the market is in play. But with notwithstanding that, I can close this window down and then I can go to my settings button. That's the top right middle button, settings here. I'll bring up a window and then I can click trading. And if you notice where I go to news category, if I hit high impact news and I hit medium impact news and I then close that window, it will show high impact and medium impact news directly on the chart. So if I then hover my mouse over those there, I can click on those high impact news and it'll tell me, okay, this is UK parliamentary vote on Brexit. So it'll tell me that's coming out. The news, as you can see, is in 39 minutes, nearly exactly, which means that I know this piece of news is going to have an impact in the market. Now, if I look at previous news announcements, look here. If I click on the previous one, this is gross domestic product annualized from the US. The previous number was 2.1, the forecast was 2.1, the actual was 2.1. So it pretty much met expectations. Not much happens, we can certainly see on the chart, and things carried on as normal. Now, we do know within the next 39 minutes, I'm literally looking at an hourly chart on the Great British Pound against the US dollar. If I stretch this out, we can see when we get to this red line, which is down the middle of the chart here, a news announcement's coming. So if I'm trading a position, I need to be aware of that. I know that is medium, and there's medium and high risk news there. I might not want to be trading the market at that particular time. So really important to know when there's news coming out. You can predict that because it's all laid out in a calendar. If you can't be bothered to go and read a calendar and then plot it on your own chart, grab yourself a copy of SmartCharts. It plumbs the news directly. In fact, from what I know, SmartCharts, other than Bloomberg, is one of the only platforms which integrates news live, so fundamental news and calendared news live into the technical chart of SmartCharts to show you as the trader what's coming up so you don't get yourself into trouble. How not to trade Forex? Step number 5, and that is gambling. Now, what is gambling? Well, gambling is trading without a plan, without a risk management plan, and without a position plan. It means impulsively trading based on gut. Now, we know straight off the bat, those people who are trading off gut show signs. Success leaves clues, gamblers leave clues. Let me show you the biggest gambling clue you can come up with. Having trained literally thousands of brokers and traders across the planet in all sorts of professional institutions, there's a wall which shows all of the trades coming in for a number of traders, whether they're long, whether they're short, where the positions are. Here's a telltale sign of a gambler. Gamblers tend to go long, which means they'll buy a position and then they'll sell that same position multiple times within the same trading session. That's a clear indication there is gambling afoot. Why is that? Well, because your trading plan should have a bias. The trading plan should have a bias whether you're long an instrument, whether you're short an instrument. There should be more factors than just buying something willy-nilly. Those that are buying a position and that position then fails, grounds out, tend to jump on the other side because they've emotionally linked in their brain. There is a correlation between the losing trade they've just taken and the next one they're going to place. They're effectively trying to win the money back that they've just lost. There is no connection between those two trades in the real world. The only connection is within the individual's world. The only problem is the person sitting in the seat. And so those that are then trading short of positions they've just gone long have effectively found in their mind this rationale which says, well, I thought the position was going to go long. It's now shorted and gone in the opposite direction. I've got to get onto that side of the trade. And of course, as they do that, like I've said before, they're a chapter behind. So they've tried to go long on a position which has now gone short. They then try and go short on a position which was originally long, and then it bounces and then it rallies in the opposite direction. I've seen traders lose 6 times on the same currency pair in a row in the same trading session because they're trading outside of their plan. They're trading in multiple directions on the same asset class within the same trading session. They don't have a position risk management plan. Now, your position risk management plan should get smaller the more you lose and should get larger the more you make. Have a think about that for a second. If I take a risk managed approach which says that I risk 2% of my account on any individual trade I place. If I had a room full of 50 traders and we gave them all $100,000 each to trade over a period of, say, 3 weeks, ask yourself this question. If we were going to hire a trader to trade one of our funds off the back of 3 weeks, we probably wouldn't do that. But let's say we decided to do that for a fun experiment. Well, which trader would we select? Would it be the one that made the most money, for example? Many people think it would be the one that made the most money, but it really wouldn't. There's a 2-step to this. The first step is we look at all of the traders losing trades. This is the first most important step. If we said that we mustn't lose more than 2% on any trade that we place, that means, let's say, for example, they have $10,000 in a trading account. That means they can lose up to $200 or £200 on any individual trade, but no more, which means that the trade risk management plan has to account for whatever 2% of the account is right now can be staked at risk and no more. Now, notwithstanding slippage or notwithstanding a gap, notwithstanding normal trading conditions, that account should not lose more than 2% of the current balance. So the first thing I would do across that whole group of 50 traders would be to completely ignore their winning trades and look closely at their losing trades. Now, if their losing trades equated to more than 2% of their account balance at that time, I know they're making an emotional gambling-based decision on how they feel about the position, and they're increasing their trade risk management based on circumstances, based on gut feel, certainly outside of their trading plan, which clearly states no more than 2% should be risked on that trade. So the first thing to do is look at those 50 people and pull out everybody who risks more than 2% on the trade, because we'll see the losing amount, all of their losing trades. You just look at their losing trades compared to their account balance at the time, divide one into the other, and you'll see very quickly if they're risking more than 2%. All of those individuals that have risked more than 2% on a handful of trades, they get thrown in the bin. They are no longer part of the game because they can't be trusted, they can't stick to a trade risk management plan, and they're allowing their emotions, their feeling, to get involved to make them feel that they can place more on the position than their trading plan dictates. So that's the first deletion that we do. Then whoever we're left with over that period of time, we look at who's made the most money, who's traded most consistently to the plan. Those are the people which are then bubble sort to the top, and they're your top traders. So we start first of all by deleting the people with the bad behavior. Remember, the vast majority of people that come to this sport and lose predominantly because they can't handle their emotions, they can't handle their mindset, they can't stick to a routine, and they cannot stick to a plan. They trade emotionally, they bend the rules too far, and the only rule you cannot afford to flex is the trade risk management and the position risk management of the trading plan. If you break those rules, you end up in the bin. If you don't break those rules, you end up on the table, which is then sorted from those who have made the most money and have stuck most consistently with their plan. The most important thing you can do in this game of trading is to stick to your position risk management plan. Markets can go with you and markets can go against you. That you cannot control. The one thing you can control is what you do about it when that happens and what you've done about it before that happens. If you've exposed yourself to too much risk beyond your trading plan, you don't get to count yourself in the winning team. Okay guys, how not to trade Forex, step number 6. Step number 6 is all about the search
for the Holy Grail. Now, most traders that come into this game think they're going to find that one trading strategy that butters their bread for the rest of their life. Sadly, that is simply not true. Trading strategies do change over time, so do market conditions, so do participants, so does volume, so does volatility, so does price range movement, so does many factors. It is clinically impossible, he says, touching wood, that you can open a black box system that will self-correct itself to the market. We do need human intervention. So there's a few steps you can do to make sure you don't fall foul of searching for the Holy Grail and wasting your money in the process. Make sure, step one, that you always back test and forward test your current trading strategies. Now listen, strategies do change over time. Sorry, market conditions change over time. Strategies tend to stay the same unless they're updated by human intervention. Your best bet is to have a grey box system whereby you're using real-time trading strategies, but with human intervention. So that's the difference between a grey box and a black box. You need to be flexible in your approach, meaning that you test your trading strategies, you back test them, you forward test them, but you should know your market condition and what your strategy is looking for. Is the strategy you're trading? And for some of you that have already seen some of my videos, and if you haven't, look at my YouTube channel. If you haven't subscribed below or you haven't liked this video, make sure you do subscribe, and then you can see my videos where I'm showing you which strategies you should use for long conditions, short conditions, trending conditions, and ranging conditions. So ranging conditions, remember that markets trend for less than 40% of the time. People think markets are always trending. They're not. 60% of the time, markets are kind of flat, doing very little, just moving sideways. There are certain trading strategies you should use for those conditions. There are certain trading strategies you should use for trending, uptrending, and downtrending conditions. If you don't know which ones they are, make sure you subscribe to this channel, get yourself to my then channel page, and then go and have a look at the strategies where I outline which strategies work in which conditions. You should really make yourself aware of that, because trying to search for, the Holy Grail is going to be a big mistake, because nothing really fits the market all of the time, because market conditions change. Final tip on searching for the Holy Grail: don't search for the Holy Grail, search for a professional trader. In other words, consult professional traders who live and breathe trading on a daily basis, because they will know which trading strategies are working in current market conditions, which ones aren't. If you'd like help with that at all, please leave a comment underneath this video and we'll hook you up with one of our professional trading team who can give you some advice, free of charge, of course. If you really just want to know what's happening, what's working in current market conditions, we're here for you. We obviously have programs you can attend should you want to do that. But most importantly, if you want to know just what's working right now, leave a comment below and one of the team will jump on and we'll help you out. But forget the search for the Holy Grail. So the only time you should be looking for the Holy Grail is when you look for Monty Python's Holy Grail, which I've got to tell you is one of the most funniest films of all time. If you haven't seen that film, do check it out. I never even heard of that film. What? Search for the Holy Grail? Oh my God, you haven't seen the Search for the Holy Grail?
Tis but a scratch. A scratch?
It's John Cleese and all the guys that did Spamalot.
Victory is mine. We thank thee, Lord, that in thy mercy... Come on, then.
It's amazing. It's brilliant. Final one now on how not to trade Forex. Point number 7, not honoring stops and limits. Now, this is really, really important. Many traders know that when markets move against them a little bit, if they would just move their stop loss a little bit and give themselves some wiggle room, they potentially wouldn't get stopped out. Big mistake. And here's why that's a big mistake, for 2 reasons. Number one, the risk that you're placing on the trade is calculated from your entry price to your stop loss. That risk should be used to then calculate your position size. So your position size should be derived from, let's say, for example, you're taking a 2% risk management across your account, which means every trade you place, you should not be risking more than 2%. Well, 2% of, let's say, a $10,000 account is 200. Let's say you have a 10 pip stop, which means that 10 pips is the ultimate risk on your trade, right? When you take the 200, you divide it by 10, and you'll know that 10 goes into 200 20 times. So your trade size, therefore, would be £20 a point. Now, by moving your stop loss, let's say, another 10 points south to give yourself some wiggle room, effectively what you've just done is you have doubled the risk on that trade. You've gone now from £200 risk to £400 risk. You've gone from 2% risk to 4% because you can't adjust the trade size once you've placed it. You are running at a risk of £20 a point. You can obviously sell a bit back to reduce your trade risk management, but you are then crystallizing a loss. So the trade risk management piece, where you place that stop loss, must be agreed up front and not moved around after the trade's in play. That will guarantee you're going to take unending and spiraling losses. Remember, the trader who doesn't know how much he's going to lose by the end of the trade is the trader that burns himself at the stake. You should always be aware of exactly what your risk profile is on the trade. That calculation should be done up front, and those stops and limits should not be altered. Unless you are blending in or blending out of a trade. That's where you add more or take less away from a position, which we can cover in more of a future advanced training session with you. I will make a note to add that as a video onto this session, or onto this channel, should I say. But in the meantime, you want to make sure that your stops and limits are honored. If I can tell you this, they say Rome wasn't built in a day, but certainly could be destroyed in one day. And most people's trading accounts can do fabulously well, sticking to their risk management plan, trading to their strategies, and over a period of a year can make fantastic returns. They can destroy it in one day. And the way they do that is by moving their stops and limits around, because the market is moving around quickly and they haven't done enough analysis up front, they haven't trade risk managed up front, and they keep moving their stop loss down. As they do that, with the current trade risk management in place, the losses are unending and can spiral crazily out of control. Remember, if you lose 50% of your account, you now need to make 100% of where you are just to get back to where you were. That's worth thinking about. The beauty in this game is all about trade risk management, and by moving those stops and limits after the fact is going to get you into trouble. Hope you've enjoyed this video. If you liked it, hit like. If you haven't subscribed already, get yourself on that subscribe list, and we look forward to speaking to you, talking to you, and training you from my trading den here in the UK in future sessions.
Cutting your carbon footprint starts at home, with 100% renewable electricity as standard. OVO Energy, what we can do.
Okay, so the first thing you're going to notice when you log into SmartCharts is that the screen is organized into 5 distinct sections at the top of the screen. So we start obviously with Learn. There's very little point in placing any trades until we've trained you how to identify decent trade setups, how to manage the risk, and how to place those trades. So we start with Learn on the left-hand side. After you've done the Learn section, which I'm going to walk you through in a second, you then move on to Charts, which of course, this is where all the action happens. This is where the live trades can be scanned for, risk managed, and then trade managed. And as I talk about trade management, that leads me on to our third icon here, which is trades. This is where you actually look at your pending trades that have been placed and any closed trades. You can evaluate how well you've done in the past. Moving swiftly on to journal, and this really allows us to see exactly how well we've done in terms of our performance, allowing you to evaluate overall how well the account has performed, and then of course allowing you to drill down into any individual trade and see exactly where you got in and where you got out. And then of course, lastly is social. And this is a feature which we're imminently launching, which will allow you to track the best traders in our community and actually follow their best trades by currency pair and by asset class. That's going to be a very exciting addition that's coming real soon. But before I labor on that, let's get back to Learn and show you how we've laid out this transformational trading platform. So in the Learn section, if I jump back to Learn, straight away you can see that the screen is organized in Learn the Basics as the first course. And this is really important. This gives you, regardless of your background, regardless of how much experience you've got in the system, a real grounding in the basics of trading. So for example, if I click onto Introduction to E-Learning, it will bring up the video tutorial. And what's really interesting about this, if I hit play on the video tutorial, showing you how to recognize price patterns and market conditions, and how to try and keep your risk as low as possible. So you can certainly see there's me talking over me slightly, but you can certainly see that just the level of engineering that's gone into this platform and into the training and the animation of this platform means this training, this transformational training built within SmartCharts is like nothing else in the world. There is literally thousands and thousands of man hours that have gone into this to ensure that You know, what you're watching and what you're consuming here is literally the best training educational platform in the trading community, bar none. And I think you're going to agree with that. Not just that, we have a resources section, so every single video training module has supplementary notes. Effectively, what we've done here is we've provided written crib notes for every video. As we know, some people are visual learners, some people are auditory learners, some people are kinesthetic learners. So what we've really done with our team here is thinking about who you are as an individual and going through this process and how we can best serve you and give you the best information possible. So you're going to notice with every single video, in which there are hundreds of videos throughout this platform, training you on all the elements of risk management, of identifying the best trades, how to manage a risk, how to make money, all of that. There is supplementary notes with every single section. You can flick between those notes and the videos, as you see, just clicking down here. You also notice there's a lesson overview. It tells you, of course, what the module is about. And then, of course, there's a very helpful FAQ section where you can also suggest and add your own question as you're going along. You'll find the team are super responsive to that. So coming out of the e-learning section part of the Learn the Basics, you'll then notice there's quite a helpful drop-down list at the top. And that's because on SmartCharts, I've put 3 training courses on here for you. So of course, Learn the Basics is the first, and this is your grounding, this is your foundation course. And then the second program, of course, is the main program, which is the Learn Forex program. You'll notice it's helpfully broken down into 8 separate chapters, from Introduction to Learn Forex, to Trends, which shows you the direction of the market, relative price, you understand exactly where to get in, additional analysis, the decision using our very clever strategies, and then examining the trade, reviewing the trade, and then last but certainly not least is psychology. So you'll see there are 8 very helpful chapters in there. All the videos cannot be accessed unless you have completed the previous video. And this ensures that you do the videos in the right order and the right sequence. One of the things I love about this platform is if you can go and jump off and start trading and come back to videos and it remembers helpfully where you are. For example, if I jump back to the Learn the Basics and I click on e-learning, the system intelligently remembers where you left off. This is really clever because SmartCharts is now multi-platform, meaning if you were to then pick up your training on, say, for example, your iPad or your Samsung phone or your iPhone, and then continue watching the video, say if you're on the London Underground or you're somewhere else in the world, SmartCharts intelligently remembers exactly where I left off in my training. And in SmartCharts, we call this the Smart Sync system, meaning the system is up to date whether we access from our iPhone to continue watching our training, say for example when we're in transit, to coming back to our desktop and continuing our education elsewhere. SmartCharts always knows exactly where we last left off. So let's jump now to the charting area and I'll show you how you can simply and easily place your first trade. And if I refer now back to the FAST acronym, remember the FAST acronym was F-A-S-T. The F in FAST was how to find a trade. Well, let me just show you how simple this is for a beginner. Obviously, you could do all your analysis yourself, but as you progress through the SmartCharts system, after you've done your basic training, you will learn to use trading strategies. These are discrete trading systems which identify excellent opportunities in the market which represent low risk and high profit potential. The first way you do that in SmartCharts, you'll notice as the screen appears, we have our market watch, which allows us to look at all of the currencies and asset classes that we're currently looking at. If we want to certainly look at, let's say for example, the FTSE 100, if I want that to be at the top of the list, I hit the heart icon and you'll now notice FTSE 100 is brought to the top. If, for example, I want to trade the British pound against the US dollar, quite simply, I find the British pound against the US dollar, hit the heart icon, and again, that will be whizzed to the top of the screen. So I can sort it like favorites. But most importantly, let's just say I want to find myself a trade and I don't want to do the analysis myself. I want to use the intelligence inbuilt within SmartCharts. Well, the first thing I do is I go to the top right-hand corner of the screen where it says no strategy, because currently you're looking at a screen where no strategy is applied. You're looking at the raw price and you're looking at basic data. But I want to find something a little bit more interesting than that. So I hit no strategy, and as you'll see, it brings out our strategy scanner. Now, what this system is doing in real time it's looking for trade strategies which match the following criteria. So it is actually looking for pip runner, which is a certain type of trading strategy, 180 phase changes, another type of trading strategy. Let's skip past that and go straight to T-wave. T-wave stands for trend wave, and it certainly is one of my most favorite trading strategies of all time. I'm going to pick the euro against the Canadian dollar, again, a favorite currency pair of mine, particularly with this strategy, and you'll see it's flashing. That means I can click upon it, and immediately it will bring up the trade for me to observe. Now, we're in the find area. So we've done find, which is it's found me a trade idea. You'll notice quickly that the red icon suggesting I should be selling is highlighted and glowing. That's where it wants to draw my attention to. So it is a short or a selling trade. But really, keeping consistent with my FAST acronym, I've now got to go into assess. So the system has been clever enough to find me a good trade setup. I've now got to ask myself the question, does this make sense? Well, first of all, I'm going to grab my grabbing tool so I can put this right in the center of the screen to do my analysis. To me, my first question I'm going to be asking myself is this in a downtrend? It clearly is in a downtrend. I'm going to ask myself, is the market bouncing off these moving averages? It clearly is doing that. Are the moving averages in the right configuration? I know they are because I've been doing this for some time now, but if you didn't know that, you would learn that in the training. So I'm quite liking the look of this setup. The blue arrow to me indicates the bar from which I should be doing my analysis, where I should be going short. Effectively, it's telling me I should be placing a trade, and if the trade falls or goes down, that's when I'll profit. You'll see a few spots here. A red spot indicates where my stop loss would be. My blue spot would indicate where I would enter the trade. And of course, my green spot would be where I would exit for a profit. This is a short trade. This is selling euros against the Canadian dollar. So before I really have to identify this any further, I might look back and ask myself the question, has this worked well in the past? Does this system actually work? Well, let's just have a little look. Going back only a few days, we can see a short trade was called here. Here's the blue arrow pointing down. It said enter on this blue spot with a stop loss here, with a profit target here. Did that trade work out? Well, yes, of course it did. So that would have been a very profitable trade. What about the one before that? We can certainly see it said enter on the blue spot here, a stop loss way up here, taking the profit down here. Did that trade work out? Yes, it did, and so on and so on. I can go up further. I can say, okay, another trade was called here. Did this trade work out profitably? Yes, it did. So I'm growing in confidence with SmartCharts' ability to, first of all, identify decent trades with good setup, and for those trades to actually work out. There's three things I've got to know when I'm placing a trade. Number one, where do I enter? Now, if you're a beginner, you won't know where to enter. Number two, I've got to know where do I place my protective stop loss that actually makes sense from a technical perspective. You know, should I put it up here? Should I put it down here? Should I put it over here? Well, what SmartCharts has intelligently been programmed to do, and I must tell you that if you saw the size of the team of developers that built this, you would understand just the man hours and the intelligence that's gone into this. It knows that, look, above this area here, which obviously represents an area of resistance to price moving up, that's where my stop should be placed, above the big figure of 147.005. My profit target is down here, again, not lower than this previous level of support, so it's giving me the opportunity to get in safely, to grab a profit, and to protect myself. Now, without me having to know any of these numbers, all I need now do is hit the red button. And what that does is it brings up my trade ticket for me. So you'll see my market watch, my mini terminal is now gone, and I'm now in the area of trade setup. So I'm now getting ready to place the trade. And you can see the system is calling for me to sell enter. So this is a sell entry. It gives me the price at which I'm entering. Now I can adjust this if I'm not happy with it, but of course it is consistent with the strategy. So I don't want to mess with that. I'm quite happy with that. If I want to move my stop loss higher, if I think that stop loss is too aggressive, I simply need just to click on it and move it up. And you'll see it shows me in real time how many pips and how much actual money I stand to lose. And that means I've got a very clear and crisp idea of exactly how much risk I'm exposing myself to. When we developed this system, we said, don't just show the pips that people can lose, but actually show them how much money they can lose. Now you might wonder, well, how does it know how much money I would be losing? Well, if we go to the right-hand side here, the risk is a percentage of our account. If I decide to move my risk down to, say, maybe only 1%, let's It's moving up to 1%. You'll see that it has adjusted the trade accordingly. Now I'm only risking £99. If I decide to move my risk back up, again, it will change the values on the chart for me in real time. So I decide that I put my stop loss perhaps a little bit higher, so it's less aggressive. I'm happy with the sell entry. I'm also happy with the take profit. And all it has done in real time now is has adjusted this screen for me. So I don't have to play with any of the numbers. I've done it visually from the chart. I'm now risking, let's say, 2% on the trade. My stop loss price is based on where this line is here. You can see that's synonymous with that. So that color coding there, that purple color coding, is consistent with this line here. My entry, that red line here, is consistent with where I'll be entering the market. And my take profit is consistent with the color coding of take profit on the blue line. Effectively, the trade is all set up. Should I decide I want to change any of the elements of that trade, for example, when it expires, I can have it running for the day. I can have it running for a specific time period if I want. I can have this trade idea run for a set number of hours or minutes, meaning if it doesn't do it within 5 hours, I want it cancelled. I've got full flexibility with SmartCharts. So this can be dumbed down, baby simple for a beginner, and as professional as you'd want to get as a Goldman Sachs 20-year currency trader on one of the biggest trading floors in the world. I mean, it literally can extend from your very first trade, which is seriously guided by some of the most intelligent tools, to take you all the way through your trading career. So here we go. So I've got a T-wave on just to show you again. The trade size is to 2% of my account. My stop loss is in, thank you. My sell entry is in, my take profit's in, and I've got no expiry on this, meaning I'm happy for this trade just to run as long as possible. All I then now do is I hit the green button, which means the trade is now set up, and you'll see that the system is now flashing red, which suggests and tells you straight off the bat that I am short, meaning that I will only profit if this little white line here hits this red line and moves steadily further lower until it hits my take profit. Of course, if it was to reverse and hit my stop loss, then I would lose. So I have equal chance of winning and losing. The only advantage I have here is I am risk managed, and the edge I've got, the profitable edge I've got, is that this is a tried and tested trading strategy. It's not just something I've pulled out of my backside. So, and then T. T is the last part of the FAST acronym, which is trigger and track. So the trade is not yet triggered. It has been set up. It will trigger when this white line, as we know, hits this red line here. That means I'm then entered into the trade. But in order to track the trade, I now move into the third icon along at the top here, which is trades. And you'll see if I move to pending, there's my trade. So it's the T wave. I've risked 2% or 1.99%. It's EuroCAD. It's a sell trade. If I want to investigate it visually, I simply need click upon it, and it will show me the trade in detail. Again, if I was to click on that trade, I can now edit the trade as well. I can move my stop loss. I can move my take profit. I can even move my sell entry, given the fact the trade is not yet open. So I've got full flexibility from all screens. And then finally, of course, when the trade is consumed and it is finished, I can hit closed, and then that will show me all the trades I have placed, and it will show me the profit and loss of those trades. If, for example, I want to go and look at the trade where I lost money or made money, I simply click on the trade and it will bring up those trade details, showing me exactly where I got in and where I got out. So we have their full flexibility. Now, the last part of SmartCharts that I wanted to show you was the journal section. The journal section in SmartCharts we refer to as the Smart Coach system. And here's what's really important. The more you use the platform, the more it understands and learns about you. And this is really critical. So this is a lot more than just showing you your profit and your loss performance. That certainly is what's in the summary. You can see that straight off the bat. So it shows how much money I've made. This is a small account that I have been trading over a week just to show what's possible on a very small account. So I've had a 54% success rate. I'm averaging about 2% or 1.8%. I've got 4 consecutive wins and 2 consecutive losses. That's where most trading platforms finish. That's where SmartCharts starts. So with SmartCharts, the more you use the platform, the more it understands how you trade. So for example, I can look at what I'm most successful. Am I most successful using no strategies or strategies? And then moving into the money section, I can then look at specifically which currencies are really producing my money, which ones I'm mostly losing with and which ones I'm mostly winning with. So this gives me real detailed information about which currencies I'm winning with, which currencies I'm losing with, and most importantly, what strategies I'm doing best with. Am I better with my long strategies? Am I better with my short strategy? You can see my bias here has been to be long, and it gives me real detail as to how I'm performing as a trader. In fact, the quickest way to transform as a trader, of course, is not just to use a great system like this, but to understand the other component of using the system, which of course is you. How well do you perform? Under what circumstances? Under what currencies? Under what time of day? And when you combine you and the platform, that's really where the magic happens. And so therefore, understanding yourself is critical to your success. And therefore, giving you as much information about how well you perform, i.e. what hours of the day. This is a classic here. Notice in the mornings my performance is much better than when it is in the afternoon. That's obviously when I've lost my concentration and my focus, and clearly when I'm trading the wrong session. I'm much better trading the European session because I'm a European, and that's where I've been spending most of my time trading for the last 20 odd years. So in a nutshell, you've got the learn, you've got charts, you've got trades, you've got journal, and then you've got an icon here saying social, which is coming soon, where you can actually track the best traders who are trading in real time on the platform and actually copy their trades. So I hope this has been a quick and useful overview of how the platform's put together. This is, as you may imagine, a very light dusting. And when I say a very light dusting, a truly light dusting, to give you an understanding, if you can imagine, this platform is built so it can be accessed from anything from an iPhone 5, which is an incredibly small screen by today's standards, to an iPad, to a laptop, but you can literally paint the screen and monitor multiple markets simultaneously. You can pop out screens and have them on multiple desktops, so you can really go for the full professional trader setup from literally one login. The system is completely and 100% customizable. So for example, if you wish to put indicators on here, you should be aware that we have all of the indicators available in the trading markets on this platform. So for example, from here, if I want the MACD indicator, I can simply search for it like that, click on MACD, and then it's applied on my platform. Now, of course, if I wish to change the settings, I can click settings and go in and change all the settings of MACD. And I can do this from an iPhone. So from an iPhone all the way up, this system is completely customizable. I'm a big fan of using the average true range, which shows me how much the markets are moving around at any time. So you can see all of that is very customizable and built right within the platform. Today we are doing session 1 of live trading with Greg Secker. What I'm going to be doing is showing you how I use the strategies embedded within SmartCharts. So today, and ideally, it is 180 phase changer time. So 180 phase changer is a trading strategy. Now, one of the beauties of SmartCharts is it shows you precisely how the strategy works, which I'm now going to show you on my screen. So you get a real good understanding of what the strategy is all about. Then I'm going to flip into SmartCharts, which actually I'm already in because the videos are played within SmartCharts quite cleverly. That's why we call it a transformational trading platform. Shows you what to do in the platform, and then you literally do it in the platform. So that's quite a magical process that we had as the original design when we built this. So I'm now going to jump onto the screen. I'm going to show you the 180 phase change, show you how it works, show you what we're trying to do, and then I'll go ahead and do it. So let's just jump into that right now. If you look at this video, I'm now going to play you.
SmartCharts identifies the following conditions. For a long setup, the strategy requires the 8-period moving average to be above the 20-period moving average as further confirmation of a bullish trend. There should be a ring low bar pattern that is 2 consecutive bars with a lower low and a lower high on the second of the 2 bars.
So just to be really clear, what I'm doing there, what the video says there is we're looking for an uptrend. We're looking where the price has pulled back. So that's 2 red bars consecutively. And then that sets up the entry price, the stop loss, and the profit target. You're now going to watch that on the video. Let's just jump back to that.
The entry price would then be 1 pip above the high of the previous bar, with a stop loss 1 pip below the low of the previous bar, and with a target level of 1-to-1 reward to risk. These are the strategy defaults. Your order will be placed as a no expiry order. This means this will stay as a pending trade until you cancel it manually. or the trade is triggered by reaching your entry price. If a new seller's bar goes on to form without triggering the entry level, then we can simply cancel the order as the buying momentum we were forecasting hasn't presented itself. If the new seller bar goes on to form another ring low setup, it will generate another signal and we can update our trade and buy at a better price.
Now, what that video is really telling you is you're in an uptrend. Now, markets don't continue moving in one direction forever. That's ridiculous. Markets follow patterns of nature. Markets move in phases and markets move in cycles. So effectively, we have this phase one, phase two arrangement where a market moves up with the trend, then pulls back to a median line, to a moving average, to an average center of price action, and then it should bounce back and then continue moving upwards. So if you think of it like in a kind of a biological sense, it's markets breathe in and markets breathe out. And what the 180 phase changer cleverly is trying to do is capture the market moving up, breathing back down, so two consecutive seller bars, meaning there's some selling, some profit taking happening in the market, and then for the resumption of the buyers coming back into the uptrend, you're then trying to buy that as it breaks the high of those previous selling bars to get you back into that new phase one movement. So it moves up, drops down, and then when it corrects itself again and comes back up, you're trying to capture that momentum. Benefit of that means that your stop loss puts you in a place where you're risking very little and you're capturing early momentum back into that end of that trough movement, that phase two movement, the resumption of the uptrend. So you're getting in early. And the key to buying anything, whether it be property stocks, bonds, futures, is to buy early at the right price. If you do that, you can then really sell at any price, as long as it's a bit above where you got in and you can make a profit. If you buy late, if you're late into something because you're relying on emotions, you're onto a loser all the time. So this clever strategy keeps you safe, gets you in early, and then sets you up for a profit. So that's how, and I just wanted you to see that. I want you to see the video in SmartCharts, because what SmartCharts done, after it builds you all up and gets you clear on the technical environment of the trading system, it then shows you all of the trading strategies in a real step-by-step format. So this is obviously a long and a short strategy, meaning we can capture momentum moving up and we can capture momentum moving down. This obviously is for momentum moving up. This is a buying strategy. I placed a trade on this yesterday, which I'm in triggered this morning. So I thought I'd now show you that trade so you can see exactly how it works. You've seen how the setup works. We're looking for those two pullbacks and then jumping back in. Let's jump now to the screen. So I'm now going to come out of the Learn area and I'm going to go to Charts. You can see that here. And you can see I'm in sterling CAD. So this is the British pound against the Canadian dollar. So let me just show you the entry of this trade. So I'm up 8,502 currently. The take profit is 172.99. The buy entry was 171.38 and the stop loss there is 169.98. So that position will run now for me automatically until it reaches completion at the green dot. Now, if I want to change that trade, if I'm not happy and I think it's probably going to top out before then, I can simply click on these, any of these orders, which is the take profit, the buy entry or the stop loss, and now I can simply amend them. So you'll notice here that I am trading with 25 lots. I am looking to make a profit of 23,386. But I'll notice, if you notice on that green spot there, that is going to be there for an all-time high recently, certainly a recent all-time high. And I might decide actually I want to be a little bit more aggressive and take my profit off the table rather than leaving it to get to a place it may never get to. So if I wished to if I wished to adjust my take profit, I can now simply drag this. You'll see the numbers change on the screen as I am dragging that. And I can be a little bit keener and bring it down and say, well, I'm happy with a profit of 15,000 here. And if I then hit the tick box, which is now bottom right, I've adjusted my take profit. That order is now updated. If you look, I've added the ATR 10. That's the average true range indicator. What does that tell me? Well, it tells me the average range of that currency price range movement over a period of 10 periods. In this case, a period is a day, is a daily chart. So over the last 10 days, it is telling me that this indicator has moved around. If I now change my, my grab tool to a crosshair, and I put my crosshair over here, we can see that way back here in October, this currency was moving something like 208 points. Okay, now over the last month or so, it's now moving around 108. So it's half its volatility in the last month. That means sterling, you can see that back here, it was moving around very volatile. Down here, it's still quite volatile. But as things have moved along, price ranges have started to reduce, and that means there is less confidence in that direction. But let me just show you that. Let me just draw a trend line of that, and you'll see, look, if I take it from that high point there down to here, you can see we've gone from average volatility of around 208 pips a day. That's 208 pips that currency pair has moved around on a daily basis back in October a month ago, to where we are today in November, where volatility is down to 100 pips. So volatility across November right now is half of what it was in October. What does that mean? Well, that might now be indicating that this currency has or is starting to top out. We're not getting the big pushes that we got back in October, and it could now be starting to fade. So to protect myself from potentially losing out on this trade, my stop loss is in a sensible place. I've moved my take profit closer to where I got in. So I aren't going for the 26,000, but I am going for 15,000. All I've had to do is move the flags to adjust it based on that trend of volatility sort of easing up. And that makes my trade safer, and it gives me a greater probability of banking a profit. And I've still got a very acceptable reward to risk for this type of position. So that is a 180 phase changer. I've shown you the video of how to get into it. I've shown you me placing the trade, or actually I placed the trade already. I'll place another one now so you can see it. And now I've showed you some trade management based on intel that SmartCharts is informing me about what is happening to this trade as it's in play. I think what you're going to love about SmartCharts is it doesn't just show you the whole environment you're trading in the platform, but it shows you the strategy step by step by step, how the strategy works. And then it's got some amazing reference tools which give you a really strong indication as to how well the trade is going to play out. So your trade risk management and your trade playout management is managed to perfection. So that trade is now running. I can now leave that trade. If I go to trades, I'll show you where it sits. It's obviously open. If I click on that trade here, SmartCharts is bright enough to then show you exactly where you got in the trade, which of course was here, how much profit you're in, and the trade is running. I can close that trade, and if I hit take profit, it would take the trade off the table. Not going to do that. I'm going to let this position run, but that is where the trade management is. Any pending trades are in here. There's another one from yesterday. That's another Aussie yen trade that I placed on the daily chart. If I click on that, it will also show you that trade. So I've got my stop loss, my sell entry here. Hasn't quite hit that sell entry. It's not far from it. That trade could trigger at any time. Do like the look of that trade, and that should run well. So again, that stop loss is up there at 74.12. So of course that is a short trade, meaning when the position falls, I look to make a profit for it falling until I take the profit there at 73.27. Let me now walk you through exactly how I go about placing a 180 phase change of trade. I just want you to understand also, even though I'm trading on a laptop, I know many of you love to trade using multiple screens. You can see behind me my other trading terminal back there. My screens are reversed, so I can, whilst I'm doing this instruction, if I want to look at any positions I'm in at any time, I only need to turn around and I can see them. Other than that, when I'm sat back there, I can see all my screens. Now, some of you may wish to use SmartCharts and have it sprayed across many screens. Dead easy to do. In fact, SmartCharts can run up to about 100 screens simultaneously. I think you'd be a bit of a madman if you did run 100 screens simultaneously. People do that, though, I'm told. But it's quite common for people to run anywhere in the neighborhood of 12 to 18 screens. So if you wanted to do that, it's really, really simple. This screen, for example, this sterling CAD screen, all I hit is this icon here, which is this icon with a square box with an arrow to the right-hand corner. That will then pop that screen out, and I can now push that screen anywhere I want it to go. So I could then drop that onto another screen I may have attached to this laptop. In fact, some of you who are intrepid traders on the move will be using some new technology we are going to be releasing shortly, which is a cover for your laptop where you can pull out 2 extra screens. So you have 3 screens simultaneously on the move. Very cool piece of software. If you're interested in that, leave me a comment in the comments field. Leave me a note in the comments and I'll tell you how you can get hold of one of those screens. They're really cheap. You can slide it onto a Mac or a PC and you can then pull out extra screens and you've got 3 screens on the move. Anyway, so that's how you would do that. So I'm going to close that screen now. And I'm going to go back now. So now I'm going to use this middle icon, which then shrinks the screen down and lets me see all of my positions that I'm looking at simultaneously. But I'm actually going to now go to another 180 phase changer so you can see how this works. And I'm going to show you exactly how I get into this position, how I scan and how I place the trade. So we know 180 phase changes. I'm going to change my arrow tool to a grab tool. That means I can move my chart around however I like. This is one of the beauties of SmartChart that really allows you full flexibility. Some people like their data displayed exactly how they like it. I am that kind of cat. So having a grab tool allows me to move my data around and have it just how I want to see it. So how do I get into a 180 phase change? Well, I go top right of the screen, which pulls out the strategy scanner, allows me to see all of the strategies I'm looking at simultaneously. I'm not going to confuse you today with looking at all sorts of different strategies. I really just want to focus on the 180 phase changer, which you can see here. And there is the list of currencies. Now, on that list of currencies, bubble sorted, that's a mathematical term. Bubble sorted means that the currency pair which closely matches that strategy is bubbled to the top of the list. The one that's weaker than that slightly is lower. And of course, right at the bottom of the list is the currency pair which really doesn't match the strategy right now whatsoever. So the best example, your best bet, if you will, or your currency pair most closely matching this strategy in today's example on a 4-hour chart here is the euro against the Canadian dollar. So let's click on that and it'll bring up the chart of the euro against the Canadian dollar. Now if you're a beginner, you might be wondering, what do I do here? Do I buy? Do I sell? What's the story? And this is a classic example. If you're not sure and you've never used SmartCharts for the first time, the trick always is to look at the red and the green button and which one is glowing. So you can see the red button that is glowing here. If I just leave my mouse off it, you can see that pulsing movement of red tells you this is a short strategy. If you aren't clear about that, just looking at the screen, you'll see the red fading background is indicating you should be going short on this position. Now, this is a nice looking trade. I looked at this early this morning. Why is this so good? Here's why. You've got amazing time frame correlation. You've got moving averages moving down. You'll notice, watch as I now move my mouse across the screen. So you'll see the market falls and then it resumes back to the moving average. Then it falls and then it moves back to resumes back to the moving average. And then you can hear the pattern. It should now be looking to fall. And if you look closely here, and I'm going to kind of enlarge this so you get a real good view on this. There we go, like that. There we are, perfect. So if you'll look here, there's 3 dots, the red, the blue, and of course the green. Again, we're just nipping in, grabbing a sexy little profit that is really lined up for us. We've got a nice overextension bar here, which means that the buying pressure back to the mean is drying up. Again, volatility is reduced, no problem whatsoever. So all I'm going to hit now is the red glowing button, which will bring up that 180 phase change. It'll give me those 3 orders again, the entry, the stop, and the take profit. So I'll hit that. And you can see, look, it's saying sell entry at 146.17. Again, 25 lots. I've got a stop loss at 146.32, which is here. And my take profit is literally 15 pips below at 146.01. Really like the look of that trade. If I'm a betting man, which of course I am, the probability of that being successful is very high. This is a very successful strategy. You can see the one previous was successful. Wouldn't have taken these ones because they weren't at the right stage of the cycle. I want it coming back to the moving average as it does here. This will very likely be repeated. So I'm going to okay that and I'll just hit the green button here. If I want to adjust this at all, I can. If I wanted to take a little more profit, I can just click on that and drag that down and get myself to about 2,800. I think that's safe. My stop loss, if I wish to amend that, I can move that just ahead of those moving averages. That can give me a little more protection. And then if I hit the green button, those numbers have now all been changed in the order ticket for me. I'm now using reduced risk, and I hit confirm, and that trade is now placed. It hasn't activated in the market yet, of course. It won't do that until the price breaks through this level of 146.17. You can certainly see the price right now is 146.41. So it's got about 25 pips to run until it enters into that position. If it does, then we will be short and we will look to collect profit when we get just south of the green dot. So that Euro CAD is now placed. So today we've looked at the 180 phase changer. I hope that's been really helpful. You've seen how I select a trade. I've showed you, I started off by showing the video so you could see the training on it for both a long and a short trade. I showed you the 180 phase changer that triggered yesterday that's currently in play. That's happily moving along into about 7,000 to 8,000 pounds of profit. We'll take that off the table when it hits 15,000. We also looked at the change of the average true range and how that can indicate that maybe some of that price range movement is shortening down. So get a little bit more aggressive, take that trade off the table when you're ready. We also looked at placing another trade, which was a Euro CAD on the 180 phase changer. I hope you found this really useful. I'm going to be doing a number of these from the live trading sessions with Greg from my trading den here at my home in the UK. If you have any questions, any feedback, any comments, please do leave them below the video, and I look forward to seeing you on another one of the live trading sessions with Greg. Hey, Greg Secker here, another trading session with me. Well, today we're looking at the Pip Runner. Pip Runner is a very popular trading strategy. It's for those of you that have started to master some of the higher time frames, such as the 4-hour, the 1-hour, and the daily chart, and you now want to start adding more pips and profit to your portfolio on a interim intra-daily basis. I'm going to show you the Pip Runner as it is described within SmartCharts, so you get a good understanding of the training of how a long setup, a buy setup for the Pip Runner is played out. So I'm going to show you the educational first, and then we're going to go straight in, down and dirty, and go and find ourselves a Pip Runner, see if we can't get that trade on and get that thing moving. So let me just jump to the training right now. Here is the Pip Runner.
Trade with a trend, we would like to see higher highs and higher lows on the current time frame, and also a higher time frame such as the 4-hour chart by using multiple time frame analysis. For a long setup, the strategy requires the 36-period moving average to be above the 100-period moving average as further confirmation of a bullish trend.